Pat Keon, a Senior Research Analyst with Lipper. I'm here to speak to you about the fund flows activity for the week ended Wednesday, August 22nd. We'll start this week's report by taking a quick look at the market activity for the week. The S&P 500 index and the Dow Jones Industrial Average posted gains of 2.3% and 1.5% respectively for the week. The majority of these increases were posted on the first trading days of the week as the markets took strength from a potential thaw in the trade tensions between U.S. and China. It was announced that day that the two countries would hold lower-level talks before the end of the month in hopes of de-escalating what's turning into a tariff war between the two. Let's move on now. We'll turn our attention back now to the fund flows activity for the week. We'll start by taking a look at the macro groups. Equity mutual funds saw net outflows of $3 billion for the week. Taxable bond funds took in $1.1 billion in net new money. Muni Debt funds had net inflows of $296 million, and money market funds saw their coffers grow by $4.2 billion. We'll take a closer look at each one of the fund asset groups now, starting with our equity groups. As we just spoke about, equity mutual funds had net outflows for the week, roughly $3 billion. It was their ninth straight weekly net outflow, and it brought their year-to-date net outflow to just over $12 billion. Taking a look at this week's activity, we see non-domestic equity and domestic equity mutual funds both had net outflows. Non-domestic saw $1.7 billion leave, led by the International Multi-Cap Core peer group, which had $1.4 billion in net outflows, while domestic equity funds saw $1.3 billion leave, with equity income funds responsible for $484 million of that. For the year-to-date, non-domestic equities have significant net inflows, roughly $62 billion, while domestic equity funds have seen a large net outflow of roughly $75 billion for the year-to-date. Moving on now, we'll look at the equity ETF group. Net inflows for this group last week. They took in about $4.7 billion in net new money. It was their sixth straight weekly net inflow, and it brought their year-to-date net inflow to just over $73 billion. Major contributors to this week's gains was the SPDR S&P 500, had net inflows of $1.2 billion, and the JP Morgan Beta Builders Canada ETF had positive flows of just about $1 billion. And conversely, the Financial Select Sector SPDR ETF had net outflows of roughly $736 million. We'll move on now to our taxable bond fund group, starting with mutual funds. This group had net inflows last week, about $1.1 billion there. It was the third straight week of net inflows and raised their year-to-date net inflow to just over $60 billion. Major contributors to this week's net inflows was the ultra-short obligation peer group, as well as the Core Plus Bond Funds peer group, which had net inflows of about $857 million and $377 million respectively. Moving on now, we'll look at the taxable bond ETF group. Net inflows for this group as well last week, $2.3 billion in net new money coming into their coffers, raised their year-to-date net inflow, total net inflows to $46.8 billion. The largest individual net inflows among the ETFs this week was the iShares iBoxx Dollar Investment Grade Corporate Bond ETF, had net inflows of just about $850 million, followed by the iShares JP Morgan US Dollar Emerging Market Bond product, which took in about $250 million. On the sell side of things was the iShares Intermediate Term Corporate Bond product, which saw roughly $170 million leave their coffers. Let's take a look at our Muni Debt Fund group now. Positive flows for this group as well last week. They took in $296 million in net new money, raising their year-to-date take to just about $8.7 billion. Major contributors to last week's net positive flows was high-yield Muni Debt funds, had $216 million in net new money come in, and general Muni Debt funds took in about $87 million in new money. Our last group to take a look at this week is money market funds. They had the largest net inflow this week, about $4.2 billion, raised their year-to-date positive flow to $9.6 billion. Major contributors to this week were institutional money market funds, took in $3.3 billion in net new money, followed by money market instrument funds, which had net inflows of $2.5 billion, and the largest net outflow belonged to institutional U.S. Treasury money market funds, which saw $2.5 billion leave their coffers. Well, that wraps up this week's report. If you'd like to take a closer look at the data for yourself, please go to our website, which is www.lipperusfundflows.com. And please join us here again next week, where another one of our analysts will be speaking about that week's fund flows activity.